It's the biggest asset you'll probably ever buy, and it's probably the biggest debt you're ever going to have. You've clicked on this video because you want to know the best ways to pay off your mortgage early. I've got 7 steps for you. Let's get on with it. So, if you've cleared your expensive debt and you've got a sufficient emergency fund in place, it could be worth thinking about starting to attack your mortgage. The first thing I would say is check with your mortgage lender what the rules are on your particular deal. For example, you might be penalised for paying off your mortgage early or over a pre-agreed limit. For example, my current mortgage is on a fixed rate deal and I'm allowed to overpay 10% in any one year without being penalised. So for example, if you had a mortgage for £150,000, that's still £15,000 that you can overpay, which is still £1,250 a month, which is a hell of a lot of money. But check your particular deal. If you've got a flexible mortgage or an offset mortgage, you might have more options entirely. So the first thing is make sure you know the ins and outs of your current mortgage deal, which brings me nicely on to step 1. Step 1 is overpaying with a lump sum. Imagine, say you've got a £150,000 mortgage on a 5% interest for 25 years. If you made a lump sum overpayment for £5,000, you'll save yourself nearly £12,000 worth of interest and you'll clear the mortgage 18 months sooner. Imagine having an extra 18 months with no mortgage payment. Step 2 is overpaying on a monthly basis. Not everyone has £5,000 they can throw at their mortgage as a lump sum, but many of us might be able to find a little bit extra each month. On that same example of a £150,000 mortgage at 5% interest over 25 years, even if you only manage to overpay by an extra £50 a month, you'll save yourself over £13,000 worth of interest and still pay off your mortgage 2.5 years quicker. Now imagine you could actually overpay by £100 a month. Now you're going to save yourself over £23,000 worth of interest and pay off your mortgage 4.5 years sooner. Step number 3 is make an overpayment quarterly. So this is somewhere in between. Maybe you don't always have lump sums and maybe you don't want to commit yourself to monthly. So on the same principle, imagine instead of doing £100 a month, do £300 each quarter. You might find that commitment a little easier to stick to. Now you're not going to save quite as much interest, but you're still going to clear your mortgage 4.5 years earlier. Step 4 is make your payments bi-weekly. Now the concept of a bi-weekly mortgage payment is pretty simple. You're going to make half your mortgage payment every 2 weeks. That means you're going to make 26 half payments, which is the same as 13 full payments. So by doing this, you actually make an extra monthly payment each year. So instead of paying, say, £1,000 a month, you just pay £500 every 2 weeks. And by doing so, you'll make 13 payments a year, 1 extra, and you will clear your mortgage sooner. So those 4 steps were all about overpaying in different frequencies. And in truth, if your lender will allow it, there's merit to every single one. So you should try and do them all or a combination of. Overpaying while interest rates are low means you'll have a smaller mortgage now and less to potentially pay higher interest rates on in the future. But in order to get this right, there is one critical thing you must do first before you start any kind of overpayment method. When you make an overpayment, your lender will probably give you 2 options. They'll either give you the option to reduce next month's mortgage payment by the amount you've overpaid, or keep the monthly payments the same and reduce the overall term instead. Now this is really something to watch for. If you get this wrong, your overpayments won't make that much of a difference to you at all. If you're faced with this option, always tell your lender you want them to reduce the overall term. One final point is timing your overpayments might be worth thinking about. If after weighing up all the options you've decided that overpaying is what you want to do, if you're charged interest daily on your mortgage, then the sooner you make your overpayments the better, the more interest you will save. if you get charged your interest annually, then you need to make sure that the overpayments that you're making go against the year's interest that you're in. More often than not, your mortgage interest will be accrued daily, and so the sooner the better, but check the deal you're on. One final bonus with overpaying on your mortgage is not only do you save more interest and you pay off the mortgage sooner, but the loan to value ratio on your loan will fall. So when it comes to remortgaging, you're going to have access to cheaper deals and therefore saving more and more interest. So that's all about overpaying, but what else can you do to get rid of your mortgage early? I have some more tips for you. Step 5 is to lower the actual term when you remortgage. So let's say you are on that 25-year deal, you've been on it for 5 years and it's coming up to remortgage time. The natural thing to do is to take out a new mortgage on 20 years to keep it in line with the original term. But have a look at what the costs might be by lowering the term at that point to 15 or say 10 years. It's the ideal time to have a look at it. Now, this is less flexible because once you commit to that new deal, you commit to that new monthly payment. So step 6 is actually pretend you did step 5. So because step 5 is quite an extreme example and very strict because you fix yourself into those payments, step 6 is just pretend you did step 5. So on that same example, you're coming up to remortgage. The natural thing to do is just do 20 years. So do 20 years, but overpay by the same amount that it would have been if you'd have gone down to say a 15 or a 10-year mortgage. By doing that, you keep the flexibility in your hands on how much you're overpaying. So if money becomes a bit tighter further down the line, then you can turn on and off those overpayments. Whereas with step 5, if you committed to that new lower term, you can't just alter what you're paying. Step 7 is don't take such a huge mortgage in the first place. Might sound really obvious, but just because the lender's affordability calculation says you can borrow £500,000 doesn't mean you have to borrow £500,000. Think about your circumstances, what's important to you, be strict with your own budget on what you want to be spending, and only borrow what it is that you want to borrow. Don't be tempted in by what the lenders might lend you. Now I just want to give a bonus or an honorary mention to a step that I didn't really include as its own step, but it would be another idea to increase your income. Get yourself a side hustle, as people often call them, any way to boost your income. I'm a huge believer that it is much better to boost your income than it is to trim your expenditure. Trimming your expenditure, although it's a useful exercise, can be a pretty miserable old thing, and I actually think it's easier and more effective to find extra income. And I believe all of us can get ourselves a little side hustle and earn money on the side if we really put our minds to it. So not its own step, but another thing to do is to find a way of getting more income so that you can throw that at the mortgage. So there you go, 7 steps on how you can pay off your mortgage a lot sooner, and a little bonus point at the end there. Now remember, it's really important to compare what else you could do with your money instead of something like overpaying on the mortgage. Savings rates are at all-time lows, so chipping away at the mortgage might seem like a good idea because that's actually going to put you in a better position than it would keeping your savings in a bank. However, my point always has been, and I've mentioned it before on this channel, a decent, well-run, well-diversified investment portfolio will probably do better over a long period of time than the interest you're paying on mortgages with the way that rates are at the moment. So give that some thought as to whether overpaying on the mortgage is a good idea, but those 7 steps are a surefire way to getting rid of a mortgage a damn sight quicker and getting you to financial freedom a lot sooner. If you found value in the video, please give the video a like. We put a new video up every single week, so please be sure to subscribe. Drop me a comment in the box below. How long is it going to take you to clear your mortgage? What strategies are you employing? Or do you have any others that I haven't included in this video? My name's Tom Morgan. This is That Finance Show. Thanks again for watching. I'll see you next week. Happy? I'm done. I've got to go to the loo. I've got to go.